The household income, though, that is going to be what determines the premium tax credit and if they qualify for financial aid via a premium tax credit. So you have to make sure that all of that income we just went over, all of the different things you include, make sure you add all that up, and that's what's their projected income for the year. So it's super important you get that as accurate as possible. As many of you know, if they underestimate, so say they put on there that they're going to make 30,000, but then they actually make 50,000. When it comes to time to file their taxes, they're going to be owing whatever the difference would have been all at once. So I've seen people have to owe up as much as, $8, $9, $10,000 due to their income not being projected correctly. So as a broker, it's your responsibility to educate. As a consumer, it's their responsibility to give you those numbers, update you throughout the year. But a good broker or a good agent will always follow up two, depending on the type of clientele you have. If you follow up once or twice throughout the year, that's pretty good. Some clients need quarterly reminders, so just make sure that you are staying up to them with that household income projection, especially if they're self-employed. With that being said, say you put 50,000 on there and they actually make 30. So we'll flip the scenario here. They will actually potentially get a bigger tax credit when they file their taxes. So if they underestimate and make more, they're going to owe more. If they overestimate and make less, they should receive that back when tax filing comes. So make sure you explain that clearly to your clients. At the end of the day, like I mentioned, it is their responsibility, but as a broker, it's your obligation to at least educate. Okay, so this is the federal poverty chart. Now, this is for states that did take upon the Medicaid expansion, and I'll explain that in a little bit too. But the 150% would qualify for a silver 94, typically a CSR, the highest one, cost share reduction. And then the household size is here on the left, and the income they need to make to at least be eligible would be that 150. So if it's a household of one, they'd need to make at least 22,590. If there's two in the household, just over 30,000, and so on. And then these other numbers just go up, and that's how much they need to make to fall into this percentage category. Now, what that means is that category itself is how much premium tax credit they're going to qualify for. Now, it does depend on income. That's a super critical part, but it also depends on their location. So their zip code, their county, that also determines how much financial aid they would receive as far as a premium tax credit goes. But this chart's nice to have when you're helping qualify clients or speaking with clients. If they fall below this 150, almost always they will be a Medicaid type client, unless they were declined Medicaid or a few other things that could help them qualify for an ACA plan. But it's good to have this on hand in reference. Again, this is for the Medicaid expansion states. Those who did not adopt the Medicaid expansion will be actually a little bit less than these numbers. Now, I will go over which ones those are. So the ACA Medicaid expansion coverage to nearly all adults with incomes up to 138, so that 138% I showed you, of the federal poverty level. That would be just below 22,590 for this year. So this is just, this number's a little off. Provided states with an enhanced federal matching rate for their expansion populations. To date, 41 states, including DC, have adopted the Medicaid expansion, and 10 states have not adopted the expansion. Current status for each state is based on KFF tracking and analysis of state expansion activity. Now let me show you. Sorry, let me full screen that again. If it'll let me. There we go. So as of today, these are the states that have adopted and implemented the Medicaid expansion. That would be the blue states on the blue states on this presentation. Those who did not adopt will be the orange states. So if you were to talk to a client in Texas, that 150% might be closer to 16,000 rather than the 22,000. So the numbers are lower. If you were to talk to someone in North Carolina, obviously it'll be the chart you did see and the numbers will be higher. So it's just really important to know where you're marketing, who you're talking to. If you're talking to a lower income demographic, then this income chart is super critical. If you're talking to maybe a middle income, higher income, chart's still important because it'll help you determine different SEPs, if they would qualify, helps you determine what they may be receiving in a tax credit. So just important to know which states have adopted the expansion, which states have not, especially those of you looking at the lower income demographic and those types of markets. It's really important to know that you're not, talking to clients who make too little of income, but also talking to clients who do qualify as far as income purposes go, who can get those good CSRs, and some of them will get a $0 a month plan, which is great. So obviously, if we go back to the chart here, if they're below this 150%, like I mentioned, I apologize if it's small on your screen. This is all going to be on the all access Insure University as well. So you will have access to that. But say you fill out an application for someone and they are below the 150%. Say you're talking to someone in North Carolina, that's a state that did take the Medicaid expansion, and they make, let's say, $17,000 a year, which you would be surprised. A lot of people who are self-employed or lower income do make that income. So what that would look like,